The Indian growth story doesn't seem like it will slow down. But if you want to diversify your investment outside the borders of the country, here's a fund that may appeal to you. The Templeton India Equity Income Fund. This open-end equity fund aims to provide a combination of long-term appreciation by investing in stocks both in India as well as overseas. So this may help you maneuver a falling or a volatile market and also keep you from joining in the fund during a sustained rally. Templeton India Equity Income has beaten its benchmark, the BSE 200, in the last 1 year as well as over a long time frame of 2 and 3 years. What's more, it has also comfortably beaten the returns delivered by the Sensex over the last 3 years, a feat not matched by many international funds. Let's put the numbers to this to give you a better idea. If you invested 1,000 rupees in this fund when it started, you would have 657 rupees last year and 1,481 rupees today. Investors who have a flair for equity-oriented investments and are looking to diversify their assets across various economies as well as currencies should consider adding the fund to their portfolios. But let's do a little more digging to find out if it's suitable for you. So there is a 138% return over the last year from the Templeton India Equity Income Fund. That's impressive. So is this a fund that you would be recommending to investors?
But I don't think investors should get impressed with 1 year return as of today, because most funds will have returns of over 100%. That is not unusual. This is basically the base effect. Last year this time the market had still not recovered and it was in shambles, and from those levels to 100%, there is nothing unusual about it. But I would say that Templeton India Income Equity is a likable fund, is an impressive fund for many other reasons. The longer history, its ability to spread across. This fund has a mandate that it can be invested in up to 35% in foreign stocks and income yielding ones. So I think there on occasion this fund has been able to capitalize on such opportunity. This is proving to be relatively more impressive fund than many of the growth strategies at Franklin Templeton.
Would you say an Indian investor needs this kind of diversification outside of the Indian market, where we also need about 35% exposure overseas? Is that important for an Indian investor?
In a limited way, and history proves that markets, sectors, segment of the market, it turns around when you least expect it. So today maybe the global scenario looks grim and India is a growth story and it looks like the most promising growth story globally. But things will turn around, and I don't think there is anything permanent in markets. And this is an enabling thing in the fund. The tax treatment of this fund is like, it has all the advantages of an Indian equity fund because it invests 65% on the minimum in domestic equities.
But what I'm really asking you is, if I'm an investor who has room for 3 equity diversified funds, maybe just 2, should I be considering this fund at all, or should I stick to the ones that we've normally named on the show, which are funds that invest in Indian stocks?
I would say it is on a standalone basis, it's a fund worth considering.
All right, one last question, Dhiren. If we pull up the top 5 stocks of this portfolio, Tata Chemicals, ONGC, Sundaram Finance, not the normal list of stocks we see in an equity diversified fund, how would you rate the stock picking of this fund?
No, it is impressive and it shows in the performance numbers. This 135% return what we see in the past 1 year is entirely a function of high quality stocks being completely out of favor, and here is a fund which was focused on that. So whenever we see this fund will always do very well when the market is in dumps and thereafter.
All right, finally, Dhiren, to put it in a nutshell, the Templeton India Income Equity Fund, good, bad, average, what's your take?
I think it's a good fund.
Dhirendra Kumar there giving us a review, telling us it's a good fund, but make sure it's not a very large portion of your portfolio.